Very good morning to you, Lagos. This is Smooth 98.1. Love music, love life. 32 minutes past 6 a.m. It is a Monday morning, 9th day of February 2026. And just like that, February is galloping along really nicely. It is a new day, it's a new week as well. And it's that time to jump into the world of business on the Smooth Breakfast. This is Business Express brought to you by Into Switch. My name is Ayokunmi. Great to have you join us this morning as you start your day and your week as well. What better way to start than to talk about what's been going on in the business world? It's an interactive session as always. You can keep up with us on WhatsApp and on YouTube as well. We're streaming live at Smooth 98.1, Smooth 981 FM Lagos, Smooth 981 FM Lagos. That is on YouTube. You can leave your messages on WhatsApp on 0911 0911 That is the WhatsApp number to leave your messages. This morning, we're talking about oil, and we'll be taking a look at the crude oil outlook for Nigeria. Hey, we all know how much our income is riding on the crude oil market, and we'll be taking a look at the outlook for the country this morning. Joining me to talk about this and give some insight on this particular issue is Gbemi Adelokiki. She is a research analyst with Coronation Research. Very good morning to you, Gbemi. Great to have you on the show.
Good morning, Ayo. Thanks for having me.
It is a pleasure. It is a pleasure. What better time to talk about this, starting the week, looking at what is on the cards when it comes to the crude oil supply. And talking about the crude oil supply, I'm just jumping right into this one, straight off the bat. There's been a lot of talk of a supply glut in global oil prices. Where exactly is that glut coming from?
Okay, truly, there's been discussions or conversations around this, and the so-called glut is not really from one source. To be honest, it's really a result of several factors coming together at the moment. There is the supply side and there is the demand side. On the supply side, the oil production has been very strong since 2025 into 2026, especially from the US. We have US shale producers, that is the companies that extract oil using modern drilling techniques. They have remained very resilient. This has helped, it has been helped by better technology and improved efficiency. Brazil has also continued to, increase output. And at the same time, demand has not moved at the same pace. We have China, which is one of the world's biggest oil consumer is still using is now using more of electric and hybrid vehicles. So while parts of Europe at the same time is also reducing oil consumption. So in addition to this, there is still a large amount of what we call shadow supply. What's this about? So all countries like Russia, Iran, and Venezuela, they are under sanctions at the moment. So much of their oil is being stored in tanks and on ships. And as it looks, they are looking for buyers outside the official markets. So when we have more oil coming into the market and then the demand is not moving as quickly as the supply is, the result is what we have now, supply gluts, especially when we even see rising volumes of oil, sitting in storage and on oil tankers. So that's the result of, that's what we come to, a supply glut because of the current situation we're facing.
Right. And I know that this sort of situation has its consequences, or it has its ripple effects down the line when Nigeria is concerned. I will come to Nigeria pretty soon. I'm going to keep that in my back pocket for now. But let's talk about OPEC Plus at the moment. Now, just last week, OPEC Plus agreed to keep its oil output unchanged for March. Do you actually see them continuing to stay in place as far as output is concerned?
Well, in the short term, maybe, yes. In the short term, we expect that this will be the case because truly, we have seen OPEC Plus is now far more cautious compared to where they were early last year. I mean, through last year, we saw increasing production. Early last year, before the last quarter, we saw increasing production through the year, and it was on the back of what they described as healthy oil market fundamentals. But at the moment, the group is now trying to strike a careful balance. On one hand, it wants to prevent oil prices from falling too far because prices need to be high enough to support investment and capital spending in the oil sector. On the other hand, it doesn't want prices to, rise so much that with the weakened demand we're already facing, the whole thing now becomes fragile. Do you understand? So there is also some internal tension from OPEC Plus. What we've seen is that some members from within OPEC Plus, they are actually producing more than the agreed quotas, and there is now pressure to enforce discipline on these people. So, but they need to do this without also losing markets to the non-OPEC Plus producers like the US and Brazil. So, adding to this caution, we've seen that and the forecast for oil demand in 2026 have been mixed. Sometimes it hasn't been contradictory. So until there is clarity, there is a clear visibility on demand, OPEC Plus is likely to, they are unlikely to make any major changes to its current approach. In fact, the group has even commissioned an independent consultancy to assess the true production capacity of it, to improve that, to ensure that they are riding on quality data. They are better informed to make the right decisions this way, and then they reduce the ability of some members to now game the system. So overall, OPEC Plus is no longer reacting emotionally to short-term market moves. We see that they are now trying to manage the oil markets in a way. They are now more deliberate and strategic about whatever decisions that they make.
Right. And just, talking about the countries that are producing more than their quota, you talked about a need for sanctions at all on those countries. Do you think they're actually enforceable?
Well, when they work together, right? When there is a collective when they actually sit together and make decisions together, we do not expect that it to be impossible to enforce these decisions. There wouldn't be any need to even converse about it if it is not enforceable from the beginning of it. So we expect that this will be, it's not just be a talk in the park. We expect that eventually they'll be able to bring them to order and ensure that the rules are enforced.
Right, right. Okay, let us talk about Iran. Of course, we know Iran is an OPEC member, and they've actually been in talks with the US over their nuclear program. What is your assessment of the latest round of talks that took place just last Friday?
Okay, so truly, Iran and US are back at the negotiating table, and it is actually a positive development. But the truth is, we do not really see a major breakthrough that satisfies both sides in the near term. That said, we expect that as long as the tensions do not escalate into attacks or open conflicts, the situation remains relatively constructive. From the oil market point of view, the key issue is geopolitical risk, the possibility that a conflict in this region could disrupt oil supplies, add a layer of uncertainty. And whenever we see uncertainties like that, we know what happens with oil price. On the other hand, if a deal were eventually reached, it could actually allow a significant amount of currently restricted Iranian oil to return to the official market, and this would definitely improve supply.
Right, right, right. Interesting perspective there. Talking about oil prices, as I mentioned earlier, I put Nigeria in my back pocket. I'm bringing that out now. Let's come to Nigeria and talk about our benchmark oil price for the 2026 budget. I think it's pegged at $64.85 or thereabouts. Do you think that is a reasonable benchmark?
Oh, to be fair, compared to the previous $75 per barrel last year, we think that this is more realistic. We think that this is reasonable, to be honest. And but the truth about it is, when it comes to Nigeria, when it comes to the situation with Nigeria and our oil, what is actually more important is our production, really, because we can't control the price. What we can do is work on our production levels. We've had issues with this since like 2014, and until this is tackled, we do not see this oil production levels situation being resolved.
Okay, so with that in mind, all that being said, what is your outlook for oil prices in 2026? The year is still young. There's still a lot of time in the year, but what are you looking at in terms of the numbers?
In terms of numbers, what we have seen so far in 2026, the figures have remained within the boundary of 60 and 69. It was only like 70 for 2 days. And so the market is likely to find support from this OPEC plus discipline that has started. But upside will be limited by global energy concerns and then their rising supply from outside the group, especially with the new barrels coming through agreements from the deal between US and Venezuela. But at the end of the year, we may begin to see the early conditions for a potential oil super cycle in 2027 and or 2028, really. It may also depend on how demand is going. Is there a recovery yet? While production growth from US shale and Brazil starts to slow, as we expect, many oil companies have not yet invested heavily enough to sustain strong output growth over the long term. And that could actually tighten supply further through the remaining years. So specifically for 2026, the key thing to watch is actually prices. For prices will be the geopolitical tensions, particularly the one between Russia and Ukraine, as well as the relations between US, Israel, and Iran. So beyond geopolitics, demand growth and oil storage levels in China will also be very critical indicators for where prices are headed.
Okay, so looking at all the geopolitical tensions that are going on, Russia, Ukraine, what's going on, Iran, US, and so on. So should we as Nigerians actually be praying for, that, should I say, in quotes, conflict to go on out there in the Middle East and whatnot, at least to boost the oil prices?
Of course not. A big no. People
I,
are
I
always
mean,
discussing, and I'm like, why did that even come to your mind? The truth is, well, truth be told, through last year, what we saw was that during those periods, we saw the price surge, and it gives a like, okay, is there hope now? Since the price is high, perhaps we'll be able to attain our revenue budget and all of that. But the truth is, conflict brings uncertainty. Yeah. There are material costs, there are economic instabilities, and knock-on effects on consequences that you wouldn't even have planned, or you wouldn't have predetermined, right?
preempt, right, right.
Yeah. So for Nigeria, the real solution, as I said earlier, is actually fixing our domestic challenges when it comes to production losses, infrastructure, that's the oil and gas refining capacity, and all of those things we struggle with within, nothing globally, right? So you may have heard phrase along the lines of strong, sustainable economies are not built on the improvements. They're actually built on productivity improvements and not prayers that there's chaos somewhere else. Do you understand? So we do not want to rely on such things. We'd rather have the government work on, our production levels to be able to attain what we have set out to.
All right, all right. Thank you, baby, for sharing those thoughts there. Let's wrap things up with this message from Tayo, who's in Nigeria. He says, with this new arrangement between Egon Donald and New America, aka Venezuela, I hope he doesn't use it to threaten global oil market stability, because we won't know his mind until he starts tweeting. I mean, looking at what's been going on, with America, Venezuela, and all the cover-ups here and there. That's what I'm calling the cover-ups. I mean, what do you think about this?
So far, so good. We've not seen any significant reaction in terms of price, yeah, as I said earlier, has remained between the $60 levels and $69 levels. And what we have seen in reaction to this, I'll bring it down to the oil and gas sector in Nigeria. What we have seen them do now is to work on their production. As I said, we can't control the price, right? So we can't control if there are things we can't control, let's focus on things we can control. We take Seplat
Exactly.
Energy, for example, right? In 2025, they reported strong output of about 130,000 million barrels per day, and 130,000 barrels per day rather. And they have also now said within now and 2030, we are going to increase our production levels to 200,000 barrels per day. This is about 50% growth target, right? So that's more, within, that's more, this is what we can control. That's more, let's work on ourselves, let's work on our productivity, which we can control rather than things we can't control.
Right. And that also applies to life generally. Why bother about things you have no control over? Work on the things you have all the control in dealing with. Alrighty, Gilbert Musa in Festac says, on the outlook for oil prices in 2026, the benchmark points to the fact that we need to develop our non-oil sector. In 2005, we had $60 international benchmark showing stiff competition among the oil producers. Thank you, Gilbert, for always giving us that historical context. You are very much appreciated. Thank you, Tayo, as well, for your message. Thank you all for keeping up with us and keeping it tuned to Business Express. It's been brought to you by InterSwitch this Monday morning. A big thank you to my guest, Gbemi Adelokiki. She is a research analyst at Coronation Research. Gbemi, thank you so much for joining me on the show this morning.
Thank you for having me.
Absolute pleasure. Have a great Monday and a great week as well.
Thank you, you too. Bye for now.
All right, then. Thank you all once again. This is Smooth 98.1. Smooth Breakfast, of course, it kicks on. My name is Ayokunmi. Smooth side of life. Don't go anywhere.